please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, welcome back. It's good going for the market as of now, 0.7% higher and importantly holding above the 10,560 mark on the Nifty. But let's get in some opinion. Over the weekend, Latha was at the India Debt Capital Market Summit, and here are some voices who she spoke to about NBFC regulations, impact on yields and the way ahead.
My fear is that there are many companies or many NBFCs who have not seen 2013 and 2008 cycle. They may be taking some ALM mismatch, lending for 4-5 years, taking like capital market. No, I will throw 50 basis point higher, some mutual fund will fund me. But believe me, they will be on a root shock. Some point of time, at any price, again I'm repeating this, at any price, you will not get money from mutual fund. And if a ALM mismatch at that point of time, I think there will be issue. There's so much of urge to be as efficient as possible, and therefore don't use bank lines, let's keep borrowing capital market. But when things go bad, you need to go to the banks, and if you don't have lines, or if your lines, and unfortunately that bank has gone to PCA 2 days back, you're stuck, you don't get money. In the negative cycle, when interest rate starts going up, we are forced to sell. We sell at a higher rate. There's more mark-to-market losses. Again, we sell more mark-to-market losses. And during those periods, at any cost, maybe I'm slightly exaggerating, it may happen at any cost, mutual funds will not be able to buy any debt paper, right? So at this point of time, if you think all positive and you're saying 25% of large corporates should go to capital market, I think that's a big mistake. In bad times, corporates cannot get money from capital markets, especially from mutual funds, because mark-to-market losses, we face redemptions. So I think the best is actually behind us on the yields. I think yields going up. If yields go up, mutual funds will not be able to support. They have to go to the banks. Banks will increase MCLR. That cycle I can see coming soon.
NBFCs regulatorily required to maintain 15% capital, while banks need to maintain only 10% capital. They have a larger capital to take any shock if there is any of the asset quality. So I would say there is a larger capital which provides the cushion and which needs to be seen when you look at NBFC from a credit quality perspective. ALMs are one risk that all NBFCs have to manage. RBI prescribes that we need to maintain the interest rate and the liquidity risks in a certain bracket. So which also protects us that we do not really do unmatched funding. Unlike banks, most of the non-deposit taking NBFCs do not have ALM risk actually, because as a bank you have a large number of savings and current account balances which are technically can be withdrawn at any point in time. NBFCs doesn't have that kind of risk.
Okay, all right. Then we are holding on to those gains. The Nifty Bank is up close to around 1%. Good time to get you a quick technical check. We have Ashwini Gujral and Prakash Gaba with us. Good day, gentlemen. Ashwini, coming across to you, 75 points higher. We're not building onto those gains for the last 2 hours odd, but we're holding on to those gains. How would you read it?
See, we haven't given back substantially, having already had, 1 day of strong gains on Friday. So that means the market is strong, and there are some very clear themes which are playing out. So it's basically private financials. Somewhere, there's this governance premium which is getting now built up, and this sort of extra buying on the private banks, that's leading to this upside. Plus, you have things like Motherson, Sumi, etc., which had bottomed out on Friday. They are moving up sharply. Aviation is there. So that way, I think in the second half also the rally could pick up steam, and possibly you could end up at the highs of the day. Basically, the short positions are there in HDFC, HDFC Bank, etc. They need to be covered. So my sense is another round of short covering should be possible in the change sort of scenario where people are selling off PSUs in favor of private. As far as individual stocks are concerned, Bajaj Finserv is a buy with a stop of 5,040, target of 5,200. UPL is a buy with a stop of 708, target of 730. And Motherson is a buy with a stop of 324, target of 338. And my hypothesis is that what is happening with banks is also likely to happen with NBFCs. So all the private NBFCs may start developing some sort of premium compared to the government NBFCs.
Got it. Prakash, good afternoon to you as well. What's your reading of the index and the stocks that you're looking at?
Good afternoon to you. Well, I maintain that the market was likely to be up. Possible we close near the highs there today. Basically supported by the mainland stocks. So at the top ranking stocks are doing good today, including Reliance and other stocks. I like Mahindra and Mahindra, that looks good. We can see a climb to around 740 zone, that's possible. Stop below 720. Tata Motor DVI is another stock that's looking good. Stop below 206 and a target closer to around 215 zones. So Tata Motor DVR and M&M are looking good to me.
Financial Intelligence Unit, or the FIU, under the Finance Ministry has released a list of nearly 9,500 NBFCs which have been categorized as high-risk financial institutions. Now, who are these companies and what's the likely impact? Surabhi joins in with the details. Surabhi, over to you.
Hi, Sumaira. As you said, 9,500 different entities named in this list. So it's taken a considerable part of our morning to go through. Now, it's tough to sort of identify immediate links. There are 2 or 3 entities which are listed, several of them on the Bombay Stock Exchange. But there are lots of other entities that seem to be related to listed groups or listed companies. I'll just go through some of the names, for instance. So we picked up Reliance Commercial Finance. This was formerly known as Reliance Consumer Finance. Now, whether it is or not linked to Reliance Capital, we've written out to each and every company to seek those clarifications. There's Minda Finance. Now, it's the website says group company of Uno Minda, NK Minda Group. Again, we have written out to Minda Industries to figure out if indeed it's a related company in any form as far as a listed entity is concerned. More names: Radico Khaitan Finance, DLF Finvest. So some of the companies have started responding back to us. For instance, DLF Finvest had this to say, and I'm just quoting. DLF Finvest is a dormant subsidiary of the company, the listed entity that is DLF. DLF Finvest fully compliant with all the RBI regulations and filings. Finvest does not have any loans from public or from banks, and DLF Finvest does not lend to any third parties. This was a clarification that DLF gave to us. Another clarification has already come through from the Welspun Group. Welspun Finance is one of the other companies that has been listed in this list of 9,500 odd. Now, when we reached out to Welspun, here's what they have to say. Welspun Finance, the name changed to Welspun Tradewell Limited on the 13th of April 2016, has stopped NBFC business long back and has already surrendered its certificate of registration to the RBI for cancellation in November 2015. So that's, the clarification that the Welspun Group is putting out. They're also going ahead and saying that it's a closely held unlisted company of the Welspun Group, and it is currently holding small investments in group as well as outside group companies doing the business of trading in commodities. So some of the companies have started reaching out to us, not all. I'll name some other important names. There's GMR Enterprises, there's Centrum Financial Services. Now again, we've reached out to Centrum Capital to see if there's a link out there or not. There's Arihant Finance, ASK Financial Holdings, Axis Finance, the old name being Enam Finance. So we remember the Axis Enam deal. So again, we need more clarification. I'll come to the listed entities very, very quickly. They're not very big companies, barring the biggest thing that at least we spotted on this list was McDowell Holdings. So that's the one worth keeping in mind. Capital India Finance and Interglobe Finance, small companies. We're talking market cap between 15 crores to about 20 crores. TCI Finance and SE Investments. These are again entities worth keeping on your radar. And I'll end by just saying this, Sumaira and Nigel. For me, another interesting aspect was both the Singh brother entities, RHC Holdings, which is the big holding company, as well as RHC Finance. Both of these entities have been named. We've reached out to Mr. Malvinder Singh and Shivinder Singh, yet to get a feedback from them.
Okay, all right, Surabhi, we'll stay on top of that story, and so we'll keep getting you updates of what's going on there. But let's move on then. From the Trust India Debt to Capital Market Summit held last week, market veteran Ramesh Damani moderated a panel on valuations and consolidation in the financial space with some of the biggest market voices. Here's an excerpt of Ramesh Damani's chat with ace investor Rakesh Jhunjhunwala and what he makes of the risk-reward ratio in equities. Let's listen in.
So there is a match-off between risk and return. तो यार मेरे को इक्विटी में 14% देगा और भी तो 12% टैक्स लग जाएगा तो इस तरह से मैं 8% या 6% टैक्स फ्री बॉन्ड नहीं ले लूँ But think about it here.
But there is a differential now, Rakesh, between 6% and 14%.
There is a risk also.
There is, but does the 8% compensate you enough for it?
I'll have to ask my only client.
That's Rekha, by the way.
I think we are in a I'm in a dilemma.
Really? Would you raise cash and get into
I've never raised cash in my life. I don't pay
No,
interest.
no, so I mean, to follow up on your hypothesis that you are nervous and you don't think you're compensated for the risk in equity, then how would you
The
be?
dilemma is that technically you don't have a situation where market is prepared to go down, right? And you have the highest P's in history at the lowest level of profit should yield. And one of the most bare growth in profits in the last 3-4 years. Ask Ramdev how many times he has revised his earnings predictions in the last 3 years. So now the question is, technically market is not ready to go down, but market is extremely well valued, right? So the question is that has market priced itself for the increase in profit growth? That's the dilemma I have.
And if it doesn't happen,
yeah, so I am not going to put my money in anything against other than equity. And I'm going to put as much as my dividend income as interest every year. Because we'll find opportunity. But I think this is something which all of us have to mull. And I think what also has happened, and it happens with me, that when you have a lot of gain in 2, 3, 4 years, right, and I have the highest gain in my portfolio in the last year, the question is we get blind about gain. And we believe that it is here for all time. Right? 5 पैक पी लेते हैं तो सब दुनिया अच्छी लगती है। तो वही नफे, हमारा दोस्त राजेश शाह बोलता था कि सब नफे का दारू है। So I think that profit, and having experienced that in 2000, technically we are not where in 2007. Market is not prepared to go down. But that could happen a year later.
but Rakesh, let me just call you out on something you had said before. In a similar conference 2-3 years back, you were not as circumspect as you are now. And to interview a question on record, you said you expect the index to hit 100,000. And when someone asked you the Nifty or Sensex, you said obviously the Nifty. So what has changed? I mean, do you feel that something has changed?
I'm not saying I am very bullish on India. That's why I'm in equity.
That was a 3-year, 4-year, 5-year,
so
2022 prediction.
But Ramesh, if you have, all of us have seen unprecedented gains in our portfolio. If I'm looking at what I'm trying to say is, if I'm looking at a portfolio gain at 10 years, have I had 7 years gain in 3 years? I'm not saying normalize a period of time my return may be higher in equity. It's a very dilemmatic situation. I'm not trying to make a...
Yeah.
The question is, we are technically not ready to go down. We have all had gains, unprecedented, unbelievable gains, right? So the question is that what is the gain we can reasonably expect over the next, say, 5 years or 3 years? So, and I believe, Mr. Bhatt, who's the MD of Titan, he told me one day that why is my P 35 times earnings? So I and Utpal did a research. All P's above 30 had 15 to 20% growth, had cash flows greater than operating profits, had payout ratio of 30 to 40%. Abhi idhar to kuch bhi era, gera, nathu, dara, sab public issue 40 times earnings. And the year in which the issue comes, the profit is very high. For whatever reason, in the next year, the profit falls.
Profits falls, yeah.
So the question is that, are we blinded by the profits that we have earned so that we believe this is a party which is going to go and bust? Or we are going to get sub-moderate gains in the next 2-3 years. I'm not talking of 5 years, 7 years, 10 years. I, for one, have a dilemma and difficult to decide. But I'm going to be in equity, government sector.
And steady as ever actually is what we're seeing on the index, but IT stocks, yes, I was just going to point that out. IT stocks have slipped a tad bit. Let's pull up the IT index actually. You'll see that HCL Tech Mahindra, Wipro, all of them have come in for some profit booking. And big boy, even TCS has taken a bit of a knock. But Sumaira, you know what's gone up? Dr. Reddy's, that one's done quite well in the last few minutes.
All right. In fact, this entire weekend, all of our reporters, they've been speaking with a lot of the pharma industry bigwigs because all of them had gathered at the 15th edition of the BioAsia Summit. In fact, Ekta was there as well, and she caught up with Satish Reddy, the chairman of Dr. Reddy's, to talk about the pricing pressure in the US and also the way ahead for all of these pharma companies.
So I think it's a part of things settling down somewhat. At this point of time, because if you see the kind of pressures that have led to this situation, it's been a variety of things. I mean, some of these things have happened the first time because in the past you would actually see industry consolidating. For the first time over the last 2-3 years, you have seen the customers consolidate. and that's had its own effects. Because almost if you see about 90% is of the purchasing is done by 3 large purchasing groups. So you can kind of imagine the pricing pressure that puts on manufacturers, and that's what played out. That's number one. The second part is obviously the number of approvals. I believe last year was almost about 1,027 generic approvals which were given by the FDA. So it also has its effect on number of people competing in the market and also pulling the price down, because that's the way to enter the market once they're coming late. So if you see the net effect of all this, it's led to severe pricing pressures for most of the companies, and it's in most of the cases it's been almost double digits, including the large companies. That's what we have seen. So is that completely settled? I don't think so. So it's still going on even as we speak. But obviously it will bottom out at some point of time. You can be quite sure of that.
Going in the equity market looks good, so let's focus on the commodity space for now. Over to Manisha Gupta for a quick roundup. Hi Manisha, what's happening?
Hi Sumaira, thank you so much for that. Well, it has been a good going for the metal space in the global and the Indian markets as well. So whether you look at the industrial metals or the precious metals, both the sectors are doing quite well for themselves. The major gains, of course, coming in for the steel prices, which are up more than 3%, trading at a 3-month highs. There are more steel output cuts continuing in case of China, and that really seems to be giving that support. And with the steel prices going higher, you have the iron ore prices following very closely. We are trading at $80 per ton for that, and it's nearly a 1-year high for the iron ore prices. You've seen coking coal prices run up, and the spillover effect can be seen for the base metal prices also, where you have the zinc, nickel, lead, all of those commodity prices also trading in the positive. And as I said, the precious metals are doing quite well. You have the gold prices nearly up by 1%. The volumes in the global markets for silver have increased by 45% month-on-month basis. So clearly silver seems to be back in flavor there. We are looking at multi-week highs coming in for silver prices. I mean, as we've been talking earlier, most of the global bankers have put out silver as an outperformer for 2018. We yet to have those moves coming in, but the volumes are good, and there are those buying positions building up into that. Aurobindo Gai now joins us to talk more about that. Aurobindo, hi. Let's start with precious metals. Let's talk about silver first. What is your sense on this?
Well, actually, rightly said, the silver has been actually underperforming gold for quite some time, and it's time that silver has just started to move onto the higher side along with the precious metals and industrial metals. So I think the double side effect that is coming on silver along with the usage demand that is coming in. So I think silver is likely to remain actually positive, and it is heading towards $17, I think a key critical resistance level that we are looking at it. So once that is broken out, I think we'll see a new price range maybe for next couple of months from here. As long as the Indian markets are concerned, I'm sure we had seen 39,000 rupees per kg earlier last week, and it is just off 39,000 rupees. I think a bit of correction should be a buy, and above 39,000 we are looking at silver prices going towards 40,000 as well. So I think in the short run perspective, we recommend buying silver and holding it for the investment position perspective.
Sure. And how are you looking at the industrial metal space? Because, of course, we are taking cues from what dollar is doing. The ferrous metals are quite on the higher side. But what is not really working for the metals is the increase in the LME inventories in the last week. Do you see that impacting the price rise that we have seen continue for some weeks? Or how would you factor that in?
Well, apparently I would say the volatility is something that still cannot be ruled out, and it is definitely going to be seen more volatile this week as well. So, of course, as we said, dollar plays an important role here, but then, yeah, inventory numbers are piling up. I think that is also a worrisome factor. So, a heterogeneous kind of performance among the entire industrial metal sectors are concerned. I think one or two could be few which are still looking positive. That could be copper. I think that is still positive, and zinc is also looking positive. But then, if I would talk about aluminium or lead or nickel, probably some more profit booking could be seen in the near term. So my bet would be to buy copper and zinc for today as well as in the short run among the base metals.
Before we let you go, what's your sense on the crude oil prices? 2-week highs are back on that. The US data has been supportive. Are you buying these current levels?
I think, yes, I think $64 is almost about to break now for WTI crude oil, and I think we're going to see a new price range for 2018, and it probably can head towards $66 as well. Nonetheless, the trading volumes are a little thin on crude oil globally as well, but then a price band of $62 to $66 is something that can be expected in the short run.
Okay.